Overnight, the Fed has played their hand. They've raised interest rates by 0.5%, and that has sent markets up, including Bitcoin and cryptocurrencies. But the warning here, as always, is we need to see where these lows are coming in, where buyers are supporting the market, and where those critical rejection points are. So we'll take a look at those specifically in today's video so you can get an idea of whether this is a short-term rally or if this is a good time to sell the rip and we face further downside. Make sure you've hit that like and subscribe. Thank you so much for your support in the comments sections. I get over there straight after the videos have gone live, so I'll answer your questions over there. And thanks to the channel sponsor, Bybit, up to $4,100 of sign-up bonuses. Plus, you can stake your stable coins for up to 15% on UST. Check out the link in the video description for your sign-up bonuses. All right, let's dive in. By now, you've probably seen the news, so I'm not going to spend a ton of time on this. The Fed raises the interest rates by 0.5 point. The markets have jumped. People are feeling a little more calm. But remember, the markets have been dropping for many, many months, so there always has to be some sort of relief rally, and we need to find out whether it is a relief rally or if it is actually a bottom coming in and the market turning to then meet the next levels of resistance. Could the bottom have come in a little earlier than expected? Let's take a look. So Fed's raised the interest rates by 0.5 point. We can see all the charts. Everything has jumped up about 3% or so on the stock markets overnight. This other article here, what caught some by surprise was Mr. Powell saying the Fed wasn't actively considering raising interest rates by 0.75 percentage point in a future meeting. So essentially, it has met the market expectations. And then on top of this, the market was factoring in further interest rate rises to a max here of 0.75%, showing here that nearly 95% thought that. But since he said he's not going to do it, and the feeling around what he was saying is that it's not going to happen that much, maybe it's going to be 0.25%, maybe it's going to be 0.5%, that has given the market some more ease in their anxieties, as it says further down by Mr. Smart. So basically, the market is feeling the pressure coming off and they don't think he's going to push it down. Having said that, it could happen. So he's just saying that now because they feel like they need to get a handle on the inflation and what's going on, obviously give that market a sense of relief. But of course, like we pointed out yesterday, there's still another meeting coming up next month as well. They can always change their mind and start to change how they speak about the next meeting over the course of the next few weeks. Taking a look at the Nasdaq, yes, we can see it jump 3.4%. Remember, it has broken those lows and it's attempting to recover some of those losses. Now, I'm going to have two major things here in the charts today. I'm going to have a date and I'm going to have an area of support and resistance because we flipped under particular areas of support, which were previous support, and we want to see whether they become resistance to the market or if they then are able to break through and find their way back above those levels to tackle the highs again. So the date that I am watching now is the 21st of April. That's this bar right here that basically had the top before the market tanked and took out the lows and also the 50% level. So the major support levels within this short period of time. So we've seen a nice little higher low form, which is a good sign, especially from that low. The market is coming back to test these highs, closed just slightly under. And so it now needs to recover that area from where it currently is at 13,535 back to nearly 14,000. So as a percentage, let's grab that out and come back to the 50%. So it's about another 3.5 to where these tops are, about 5.5 to 6%. So call it 3.5 to 6% is what the market now needs to recover on the back of this possibly bullish news in the short term. So there's a lot of things that have to happen, and they're the particular levels that I'll look for, in this case on the Nasdaq, for it to recover the bullish ground off the back of the bullish news. And I think if it's unable to do that, then this was a short-term set of bullish news headlines from the Fed, and the market then drops back down. Doesn't do that, and we break above. That's a good sign for it, and that there is there's more momentum flowing through into the market. The smart money has been buying up, and they know now that that may have been one of the lows, or maybe that it is the low. And of course, that is a critical level for the market to tackle. 15,000, call it 300 as a nice round number. Next, we take a look at the S&P. 21st of April is approximately from 4,300 points to that peak, nearly 5%. As for the Nasdaq, it is currently about 5.5% away. So the S&P is slightly closer to that critical level of the 21st of April before the market was absolutely rejected and headed down to break the lows. And of course, it also needs to get past its 50% level, which is actually a little bit closer than the Nasdaq is. So the S&P is faring a lot better than the Nasdaq, which we've covered for many months now. It's just straightforward data that we can see here. And the levels to get back to in terms of a percentage, for the 50%, it's only 1.1%. And then to get back above this little zone here of the lows is about 2.5. And then I want to see it break above these highs again. That's about 5% away. Now the double top to invalidate the double top at 4,637, we need to get just above 8%. So 8% of the gains we need to get back from this current point to invalidate the double top and then head on to that more bullish space. Even with the recession fears in the background, we have 1 quarter of negative GDP growth. We need to get 2 in a row for that to happen. So maybe they're trying to hold out on that and postpone a recession. And if there is a recession, maybe it's going to be extremely short-lived, which is going to play on investors' minds. They're going to think that there's going to be more coming. And this is looking a little bit further forward in the markets. I think that sort of recession news, if it does come out, because it hasn't happened yet, I think it could fool a lot of new investors as people potentially feel and think that there should be a lot longer to go if a recession does happen. Think about what happened just 2 years ago in 2020 when we did have the recession. It basically lasted extremely short period of time. We had this mega drop so quickly, and then we had the recession later on in 2020, and the market has been up since that point. So we just don't want that case to happen again. You know, if you're a viewer here and you are thinking that this thing has to last a lot longer, there is that possibility that it fools a lot of investors because of the term inflation, and it scares a lot of people out of their positions or at least setting up a position. And then you see the market turn around and head off again without you. And then, of course, the FOMO sets in and you get this new mega bull market which then takes off. So although recession can be a scary word, it might just be something short-term, a technical word, and then before you know it, the market takes off. So don't sleep on any of these sorts of terms that that are thrown out there as if it should be the end of the next cycle, right? So the 21st of April, I just want to make a quick point on that. Looking at the news here, we had Netflix around that time on the 20th talk about their losses, and that obviously tanked the Nasdaq at the time, and that started to flow through into the rest of the market. So really why I'm looking at the 21st as a key resistance level, and this of course flows on into crypto as well. The earnings were coming out at that time. We've got another week of earnings left. So 20th, 21st, people were getting scared at that time. It's literally only 2 weeks ago, and I think people have already forgotten that the earnings were coming out. You know, they started to pile up that week. The following week, we got hundreds of earnings per day, and now our current week that we're on, again, hundreds of earnings per day. So it's still in that earnings season. People are getting quite worried, especially with the Fed meeting coming up. That is why I have the 21st of April as a key emotional date in the market for the market then to recover, to show us that bullish sign again. So that is a key level that I'm going to look at until we either get there or we miss it and get rejected on the way up. That's my indicator to figure out whether this market is really heading up much sooner, or if we're just getting the relief rally out of this low and we start to fade again as the market loses that hope and that greed after the Fed meeting. Now to Bitcoin, what we're all here for. Taking a look at the 4-hourly chart first for Bitcoin, using the high here and the major low that's come in at around 37,400. You can see just before the meeting, the market was trying to break through the 50% zone at around 39,100. We looked at this in yesterday's video. I was calling for 39,200, just as a round number above this level here, for the market to break through in order to gain that first signs of strength. So if you look at the hourly bar, the meeting occurred on this bar. It was 4 a.m. my time. And so you can see the market was really trying to break through 50%, but it wasn't until the news was announced that the market was able to break through it. And I basically just said, how beautiful are these tools that Gann put together over 120 years ago? This is your 50% tool. If you learn how to use it, it really does help a lot. Next target, 40,600. We haven't made it there just yet, and we continue to get rejected on it at that level in the past. So we need to get back to that point moving forward, at least in the next couple of days, to regain that strength and, of course, get to 43K before we can really start to see some signs of good strength through the crypto markets, of course, according to my own opinions here in the market. 21st of April, another key date. Guess where that lands? Around that $43,000, which works out really well for this analysis. Top, bottom, 50%, 43K, 21st of April, 43K. That's what my sights are set on in order to get back to these higher numbers of high 40s and low 50s to then go and test that critical level right back here at 52 to 53,000. Ethereum holding out a little better than Bitcoin. It broke through the downtrend, getting a little rejected here at 2,900. So hopefully in the next 24 hours we can get above that and tackle that bar, the 21st. That's $3,200. You can see I had it here. That's what we've been waiting for some time. So 21st of April is going to be a key level. ETH BTC, it's fared a little better than Bitcoin. So Ethereum's faring better than Bitcoin. You can see we had a little update. Solana, ETH, a little bit of a recovery here. So just a quick update on Solana is something that I've covered for a long time, bouncing off the 50%. So that's a good sign, at least in the short term. I think over the next couple of weeks and months, it's probably not going to hold out. Happy to be wrong, but I think if it does break that level, you're going to be in for some pain for the SOL holders against Ethereum. You might not see it against the US dollar value, but against Ethereum, it might not do so well. ADA, on the other hand, it's back from the dead. It's doing reasonably well. I'm going to do a video on premiums, paying premiums to ensure that we're getting in on trends that are moving in our favor rather than buying the dip like everyone talks about. Some of the worst advice in the crypto space, always buying the dip and hodling. I prefer to pay a premium, and I've talked about those back here. So I'll do a specific video on that. Make sure you subscribe and like the video. It's personally a fantastic lesson to understand how to position your portfolio and reduce the risk in the portfolio so you can make it in the long run. As for ADA, over the last 24 hours, had a nice bump of about 15 or 10% in this case. The next one I'm going to look at is around that 15 or so percent, 10%, 23 on the Bitcoin chart. That's what you want to get to, 23 Satoshis. And on the dollar chart, that's what I want to look at, ADA had a nice little bump here of 16%. Longer term, critical level, $1 and $1.20. As I mentioned in the intro, they're going to be the key levels that I'll be looking for. For ADA in particular, $1. Just look left on your chart with whichever cryptocurrency you're holding and have a look for where the bottoms came in, where the market found support in the past. So you had a lot of smart money buying up these lows, right? And then the market was able to take off from that point. These lows were then broken down, and we're now trying to get some support around that 70 to 80 cents. It has been rejected twice now at the $1.20 area. So it needs to recover first $1 and then $1.20. That's going to bring a lot more strength back into ADA, but it needs to recover and hold it for some time, not just sort of a move up and then a failure and a small bounce and then we fall back under. That's also possible as well. And I'll talk about the premiums to be paid in case those things happen to us. I'll talk about that in another video as well. Now, last one, Atom. Don't worry if you don't have Atom, doesn't matter. The point is the chart here. And this is what I think is going to happen to a lot of altcoin holders, especially as the little rip is happening right now. So we've had the support for Atom here. You can see it has come in right at these levels, about that $20 to $21. Once, twice on the way up, and then we had the rejection at 50%, twice, and we've had a nice little fall down. So we need to get some sort of relief eventually because the markets just don't go straight down to that price target that we're looking for if you're shorting. So it needs to have some sort of rally up. And if it gets rejected, you want to see a higher low for the strength to the upside, to the bulls. If you don't get that higher low and you get then a lower top and you break it, that's going to be a very, very weak signal. The beauty of it now is that it is in such a close range that you can take some sort of risk on the cryptos at this point in time for a trade. Maybe it's a sell the rip sort of scenario. So if you've been holding Atom and you're just waiting to get out, there would be a lot of people here that are potentially looking to sell out because it was previous support, and then you get that flip. that S&R flip, support resistance flip, where the market crashes through the support and then comes back up to test it before continuing the same trend. So you have to go with the trend. The trend is your friend. The trend is down. And if it is going to turn up, it's going to take some time before you get a longer term move. But in short term, there might be a good trade to be had in that scenario. So the warning, the piece to look out for, if you're still holding a ton of alts, which I think there are some people doing that. We've talked about it on Twitter as well. Potentially look for the rejection or the breakthrough. The breakthrough is what you want for these cryptos if you're holding them to continue to hold them. The rejection, that's going to be the scary point. That's the warning there. Look at the support resistance flip. Look left on your charts for the previous support and is now broken down as resistance. This is usually not the greatest sign. I hope I'm wrong. And of course, it comes up and saves everyone that's holding some atom because you do have one extra support further back here, which could be a little savior. There it is there at around $17. So you can see in the past, it has worked out at around 17 bucks. So ideally, that would be what you want to see for the bulls. For the bears, you just want to check to see if it doesn't get rejected and then breaks that low again. That's going to be a pretty clear signal that it has further to go to test some more support levels before those bulls come back in. Regardless of which crypto you're holding, that's the pattern, that's the warning. Thanks for joining me. Links are in the description for Patreon. Weekly group calls are coming up, Q&A as well. So check out that link. We'll join you over there. And of course, Bybit, up to $4,000 of sign-up bonuses. If you made it this far, leave us a broccoli emoji. That's for all the vegans yesterday who wouldn't post the steak emoji. I'll see you guys in the comment section in just a moment. Until next time, have more fun to get more done.